What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today's video, we're going to look to analyze Bitcoin, and we're going to use price action to do it. Then at the end of the video, we're going to go look at a few Glassnode charts to see if we're going to be bullish from here or if we could potentially look for lower prices. But first, we're going to do the price action portion of this video. So right now, what you can see is last week we had a nice bullish move. Let's go out to the weekly time frame. On the weekly time frame, you can see that we had a nice big bullish move and we have given back most of those gains. Now we have come into a decent place where we could potentially see support, and I was looking for the yearly open target to be hit. You can see that twice price has tried to go up and hit that level and has been unsuccessful. Now, in my opinion, that still leaves this region up here untapped for prime liquidity, and I would much rather see price get above that for a little bit, then roll over before start looking for major bearish move lower. Or, if it stays above it and continues to be bullish, then we'll discuss that when we get there. But we didn't get that. We traded right up into the weekly 21 exponential moving average and we rolled over. Going back to the daily, here on the daily, you can see that 21 exponential moving average cuts pretty much right through the midpoint of that bearish candle. And on that move lower, you also cut right back down below the 50 on the RSI, which is the bearish control zone. Now I'm going to go over to another chart because that chart shows you the pitchfork that we've been watching. All right, so on this chart, it was a pitchfork drawn on a 3-day time frame. So if I go out here, this is off log, this is on linear standard scale, not log. You can see that this pitchfork has done really good of holding price. The last 3-day session, you can see that we broke out above 3-day resistance as well as this downtrend channel. We were looking for that yearly open target right there. So when we got above this pitchfork, I was looking for support to hold, and you can see this candle, this daily candle. Once again, you have another metric that showed that there should have been support there, and we blasted right down through it. Now where we currently are, I think, is amazing, but it's not something that I am looking for to actually work this time. Down here you have a daily demand zone, and you can see that yesterday's candle closed right on that demand zone. So this is a pretty deep pullback if we're going to look for price to continue back up and test that yearly open range again, right? I do not like that depth of a pullback. I don't like the fact that we're under the 21 and under the 50. Again, that typically has me looking for bearish entries. So what I'm thinking moving on into the next day or two is if we do get a test of this midpoint, then that's probably going to be a pretty good spot to look for bearish continuation, and we will more than likely be targeting this weekly candle's low right there. Tomorrow will be the weekly close, and once again, you're going to be finding yourself waiting for that weekly close to see what happens to basically determine what we're going to be looking for. I understand that trading in this choppy mess is difficult. It is for all traders. The best scenario that you can do is wait for support, the lower edges, and wait for resistance, the higher edges, to make your trading decision instead of trying to take trading entries inside the middle of the ranges. All right, so back over here onto this chart. So what we're probably going to watch is we're going to watch the midpoint of that downside candle, and then we're also going to watch this bullish candle's resistance there. You can see that it held resistance here. There's the breakout. Should have held a support, did not. So that could be a prime place to look for potential short side entries, targeting the daily support zone. That's from right there. So that's probably what we're going to be looking for the next couple days. As far as what we're going to be doing for the next week, well, that's going to determine on how the weekly close happens. If we close anywhere below the weekly demand zone or the weekly support zone, then that target's probably going to come up a lot quicker. The reason for this move here, we had a nice big push on the daily. We're going to go back out here to the two charts real fast, and I'm over here. I'm going to pull up the DXY. Obviously, the DXY was on fire last week. Just look at this insane move to the upside. That is why Bitcoin for the last several days fell off. Let's go over here and get to the daily so you can see this last bearish day. Then you had a bearish day here. So 3 days ago, you had a bearish day. 3 days ago on this asset, you were pushing higher, and then you started to retrace as the dollar started to move higher. Now the dollar is into a potential weekly resistance level. You can see that you broke down below that resistance level and you never did come back for a retest. If we go over here to the daily time frame and look over here, see when we broke down right there on that candle, you never came back in for a retest, and that was also daily support. So now we're testing that level right now. So what I'm trying to say is if this region holds as resistance for the DXY moving forward and it does start to pull back a little bit, that could give Bitcoin another bout of strength, but that has to happen first. And since we've seen this massive pullback, we have to go with what price action is telling us right now. With that 21 exponential moving average being there, with that 50 also being above you, you also have that descending trend line slope on the fib levels. That could all be confluence to hold as resistance. If you get a daily close back above all that stuff or get back above this bearish candle, then we will be targeting that yearly open again. If we cannot get above this bearish candle, we are going to be looking for lower prices. So we're going to watch this candle right here moving on. That is going to be our determining factor of which way we're going to be trading. As of right now, we're going to be looking for entries to the sell side. All right, going into the MVRVZ score on Glassnode. This is not the MVRVZ. There we go. This chart right here, this is a good metric of letting you know when Bitcoin is undervalued or overvalued. The green region being your undervalued portion, your red being your overvalued portion. You can see that when we made this all-time high right in there, that's when we hit the overvalued regions. You can see that down here, we still have not hit the undervalued portion of this indicator. In every single major bullish market cycle, every single bear market cycle that followed, you hit that zone, every single one. Bitcoin has had 3 halvings, so we look at Bitcoin as being 3 different cycles. All 3 cycles of Bitcoin have hit this undervalued zone, and that has been where you typically wanted to be a buyer. You can see that we still have a move lower. Now, something interesting here to me on this chart, we're going to use this portion right through here. You can see this is when, after we made the 2017 all-time high and then started the bear market of 2018, right through here, we were basing out right at 6K. There was a big zone of support under there, and people were watching for that support zone to hold, for Bitcoin to continue higher. And you could see that price broke down and did this like capitulation move to the downside. That is when you entered the zone to look to be a buyer on Bitcoin, and you stayed inside of that zone for almost a month, right? Almost a month. So you had plenty of time to be a buyer at support in that region. Once again, here we are on near-term price, okay? You are not down in there. So we could be, going back to the chart, we could be looking for a longer extended term bouncing back and forth inside of your yearly open and this daily support. So we could see an extended choppy range for the next month or two until Bitcoin eventually breaks down and goes into that green zone on the MVRVZ score model. Now, I'm going to pull this out real quick just so I can show you something. Let's get rid of this moving average as we just want to look at these 2 zones down here. If you look, if we do what I'm talking about and bounce back and forth in this zone and create a hard support like we did at $6,000, then this will be the region of which I'm looking for price to get down to. You have the liquidity of this wick low that was made on the 50% correction when the bear market started. I understand that this made a new all-time high, but this was nothing but a liquidity event. That's all it was. You can see that on the MVRVZ score, how this section of price did not generate any new coins. It was just basically a liquidation event. So we're going to look for the same thing to occur to the downside after this zone happens. But anywhere down in this region would be probably a good region to start to look for buying opportunities. But you're not going to be looking for it to go down in there and then bounce out of there and go make an all-time high the next day. You're obviously going to let price do its thing down in here. If I go down just a little bit lower, you can see that 2017 all-time high. Never in Bitcoin's history has it ever went back and tested an old all-time high. So once you get below the 2021 wick, anywhere from 21 to say $24,000 would put you right in that buy zone bottom of this indicator. Now there's also another bear market floor model indicator that has also caught most of those things. Here is that 2017 bear market. This is that $6,000 support zone that was broke down. There's your capitulation move to the downside. You can see that the blue line caught it. This blue line has caught every single market cycle low. Here is the 2020 sell-off. Did not quite get down into the blue zone. And over here, if you look at the near-term price where we currently are, you can see that there is a big gap from that swing low to this orange line. All of that could potentially be liquidated in the future. So this is another metric that lines up with us being probably range bound for a long time until that floor breaks. Then you'll get that capitulation move to the downside. We have one more model over here. This is the Bitcoin risk reserve. This is what some people are looking at, saying that this is the reason why they think that we have found a floor. A lot of your Twitter people and YouTube people are talking about this potentially being the bottom for this bear market low. I am sad to say, if you look at this metric, you can simply see how wide this green zone is. And you can also see that when you first penetrated it, once again, here's the $6,000 support, that big capitulation wick low. Once you started to break down, that's the first time you actually entered that zone. You penetrated well into the middle of the green zone. Over here, 2020, you stabbed lower, almost hitting that. So that's what we're going to be looking for. Anything down in this region, that will be correlated with the MVRVZ score. That will be correlated with the bear market floor models. That'll also be correlated with what we're seeing on the charts with price action. So going back over here finally to the chart, I'm going to pull up the one thing that I've been talking about for the longest time. I am a market cycle model guy. I believe the 4-year market cycle is still intact because we do have a bull market cycle top that was formed right at the time when it should have been. Like all other bull market tops were done in Bitcoin's entire history, all of them coming in November and December. This is right in line. You can see over here that I have a buy zone. This is going to be when the next halving is. You can see that that is also in that zone from like $15,000 to $30,000. I'm pretty sure that's going to be like the zone to look to be a buyer, because this is going to take a lot of time to happen. It's not going to happen quick. It's going to take a lot of time to resolve. Once that resolve comes in, we're going to be looking in this zone. So we'll throw us a little box right here. It's going to look something like this, over and through here all the way to 2024. This is the zone of which you want to look to be a buyer on Bitcoin moving forward. Now for the near term, like I said at the beginning of the video, we're probably going to be watching for that one bearish daily candle. That's going to be our line in the sand to dictate whether we're going to be looking for longs or shorts. If it finds resistance on the midpoint of this candle, then we're going to be looking for shorts. We get above it, we're going to be looking to target that yearly open high, or that yearly open, because there's a lot of liquidity setting right above that, which is identified by the chart here. So you guys have a fantastic day. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.